Good morning, and welcome to the Leap Podcast, your concise, level headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 5th of June, 2026. Since our last update 2 weeks ago, crypto markets have moved beyond consolidation into a clear correction. Bitcoin has broken below $70,000, briefly cracked 62,000 on the intraday on Thursday, and now sits roughly 50% off its October 2025 all-time high. The breakdown of US-Iran peace talks, the longest ETF outflow streak on record, and a striking divergence with US equities at fresh record highs have shaped the past fortnight. At the same time, the central bank calendar in just under 2 weeks is shaping up as a key near-term catalyst for risk assets. Let's leap in. On the macro side, the dominant shift has been the breakdown of US-Iran peace talks. President Trump has indicated the ceasefire will likely be extended, but hopes of a speedy resolution have faded. And that remains the key near-term headwind. Meanwhile, US equities have continued to decouple sharply to the upside, with the S&P 500 and Nasdaq at record highs and the Shiller PE ratio at 42.78, the highest reading since just before the dot-com bubble. That kind of divergence between crypto and equities is unusual and worth watching closely. Turning to prices, Bitcoin is trading around 63,500 USD, down approximately 13% week over week. Ethereum has dropped below US $2,000 to around 1,780, off roughly 11% on the week. Solana sits near $70, down close to 14%. Bitcoin dominance has fallen to 59%, with select altcoins outperforming on rotation. The Crypto Fear and Greed Index has dropped to 11, deeper into extreme fear territory, which historically has more often coincided with cycle lows than with sustained tops. Roughly 1.5 billion US in crypto futures liquidations cleared on Thursday as Bitcoin tested $62,000, representing a significant reduction in leveraged positions across the market. On the ETF side, US spot Bitcoin products have now seen 11 consecutive days of net outflows totaling US $3.45 billion, the longest streak since the products launched in early 2024. May closed with $2.3 billion in net outflows, the worst monthly print of 2026. On the institutional side, Strategy made headlines with its first ever Bitcoin sale, just 32 BTC from a stack of more than 843,000, less than 0.004% of holdings. The move was telegraphed well in advance and framed by Saylor as a way to support yield payments on Strategy's STRC preferred stock. The company also repurchased $1.5 billion of its own 0% convertible notes due 2029 at a small discount. We flagged this signal 2 weeks ago, and while symbolically significant, the substance is unchanged. Strategy remains by far the largest corporate Bitcoin holder globally. On the regulatory front, the picture has softened. Polymarket odds of the Clarity Act passing this year have fallen from around 64% 2 weeks ago to 55%, with Jamie Dimon opposing the stablecoin yield compromise and Democrats digging in on ethics provisions. Looking ahead, the most important near-term catalyst is the central bank calendar in less than 2 weeks. The Bank of Japan meets on the 16th of June, with prediction markets pricing a 96.9 probability of a 25 basis point hike from 0.75 to a full 1%, which would be Japan's highest policy rate since 1995. Yen tightening has historically been a meaningful risk-off catalyst for crypto, with the August 2024 carry trade unwind being the clearest recent example. The Federal Reserve then meets on the 16th to 17th of June, the first meeting under Chair Kevin Warsh, accompanied by an updated dot plot and summary of economic projections. Markets are pricing roughly a 97% probability of no change to the 3.5 to 3.75% range, but the language, the composition of the dissents, and the dot plot will tell us far more about the rate path than the headline. Less than 3% of traders are pricing a cut in this year, and some desks have begun flagging a possible hike by September. Some context worth holding on to. Glassnode notes that over 40% of Bitcoin holdings are currently underwater, a figure that has historically clustered around cycle lows, not highs. Bitcoin News has called this the best bear market ever, noting Bitcoin didn't soar as high this cycle and hasn't fallen as hard. Standard Chartered's Geoffrey Kendrick has publicly stated that he expects Ethereum could appreciate over the longer term, although such forecasts remain speculative and uncertain. Putting it all together, this has been a tough fortnight, with prices breaking key technical levels under pressure from collapsed peace talks, persistent ETF outflows, and softer regulatory momentum. The divergence with US equities at record highs is striking, but the structural infrastructure underneath the asset class continues to mature regardless of short-term price action. Periods of extreme market sentiment have historically attracted significant attention from market participants, although past market behavior is not a reliable indicator of future outcomes. Looking ahead, the key watches are whether Bitcoin can stabilize around the US $60,000 mark to the $65,000 range. The BoJ, Bank of Japan, and the FOMC decisions on the 16th and 17th of June, any progress on US-Iran talks, a turn in ETF flows, and the Clarity Act's path through the Senate. In summary, this is a period of heightened uncertainty for crypto markets. Sentiment is in extreme fear and the headlines are uncomfortable, but the underlying infrastructure, institutional positioning, and long-term adoption story remain firmly intact. Remain calm and stay informed. That concludes your crypto market update for the 5th of June 2026. Check the YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.